Hello, everybody. Welcome to this webinar brought to you by Well-Fought International's Neighborhood in collaboration with RHB. Okay, in this webinar, we are going to talk about this title, which is Stock Market Outlook for 2023. There are only 1 month towards ending 2022. Are you guys ready for 2023? Now, the year 2022 has seen us being hit by a lot of inflationary pressures, high interest rate, geopolitical tension, causing the stock market to tank. And on domestic front, we also have a lot of uncertainty, in particular, domestic politics. So today, we have invited the managing partner of MRR Consulting, Mr. Ooi Kok Hwa, to come and share with us what is the outlook like for the global economy, for the global market, as well as the Malaysian market. In the second half of this session, we have also invited the head of originations of the equity derivative from the RHB Investment Bank, Mr. Zac Chooi, to talk about how do we use structural warrants to hedge your portfolio risk and also for speculative gains. So we are very honored to have both gentlemen in our show today. So without further ado, let me just hand over the session to Mr. Ooi. Mr. Ooi, how are you?
Hi. Hi, good evening. Hi.
Good to see you here. Yeah, I will just stop my screen sharing and hand over the session to you.
Okay. Hi. Good evening. Okay. First of all, I thank RHB for giving me a chance to share with you. Okay. Today's session we talk about the stock market outlook for next year. Okay. So we are coming to November, and then of course next year we're going to expect a lot of volatilities up and down. Okay. With many reasons. Okay. So today's sessions we're going to talk about the Russia-Ukraine conflicts, okay, then global market economies, and then the stock market outlooks for 2023. Okay. So talk about the Ukraine conflicts. Okay. I like to use the Ukraine conflicts because even United Nations also call it a Ukraine conflicts. Okay. Now, this is actually the latest the map. If you look through the blue color, basically it's actually the Ukraine actually managed to get back roughly about half of the size. If you look through the total, the blue color and the red colors, I mean the pink color, roughly about half and half. So I'll say Ukraine able to fight back, okay, to gain roughly about half of it, okay, the blue color. Okay, so quite a good achievement by the Ukraine. Okay, it's actually quite tough, for Ukraine. You may ask, this is actually pink color, but this pink color is actually quite a big area. Roughly about, I'll say, it's almost same as Semenanjung, Malaysia, the pink color, until Crimea, Peninsula Crimea. So basically, it's actually quite a big area. And actually, from the south, Kherson area to the north, basically it's roughly about coming to 1,000 kilometers. So it's roughly about something like Johor going up all the way to Perlis. So that's why it's actually quite the border is actually quite a big area. So if for Russia to actually to defend it, also quite difficult because you're talking about such a big area. Okay, from the south to the north. Okay. Of course, his objective right now is Russia is actually, to gain the full control or the Donetsk, because they already control Luhansk, then but they still have the Donetsk and then Zaporozhye. Then recently, they lost on the Kherson area. Okay. Now, I want to share with you is actually right now it's actually in winter in Ukraine. So do you know actually what's actually roughly the temperature right now in Ukraine? Okay. The snow period from Ukraine. Basically from 28 October to 5th of April. Basically, right now, on average, December is actually about 5 inches. So these actually the the weather in actually Ukraine right now. If you look at the Kyiv area, the capital right now, it's actually, you know, it's basically already snow. Okay, so right now with the recent bombing, destroying roughly about 1/3 of the power. So and without gas, bombing of the power, electric. So it's very tough, very cold, because right now, you know, the snowfall, okay, is roughly, you know, it's quite it's getting higher, you know. It's actually, you know, peak roughly actually in December, January. Okay, so the right now, you know, very cold in actually, you know, in Ukraine. Okay, the temperature below 0. Okay, now this actually, you know, the Dnipro River, okay, during the winter. Okay, if you understand this Dnipro River right now is actually, you know, that Russia actually retreat to the eastern part of the Dnipro River, because they're scared, because they actually, you know, they're losing up to the Ukraine. Actually, Ukraine actually quite a lot of people actually are look down on Ukraine, but actually Ukraine throughout from January until from February until right now, I think they are actually quite good, you know, in fighting back, you know, that kind of spirits. Of course, they actually, you know, together with the help from some actually foreign soldiers actually from the NATO's, okay, neighboring countries, especially Poland. Okay, now you can see from here, this actually, you know, during the winter time. Okay, this actually picture took actually in 13th of January. So you ask me right now, the Russia actually retreat back to the eastern part of the Dnipro River, I mean, like near the Kherson area. So you ask me whether, you know, this period here, okay, so once actually the river actually, you know, frozen, you ask me whether the Ukraine actually will extend further to the south, which actually, you know, Zelensky says that by December they will take over Crimea area. Why? Because right now still the water actually the river not frozen yet. So by January will be frozen already. December, end of December, during Christmas time, the river will be frozen. So whether the tank can actually pass through it, then continue to attack, no, all the way to Crimea area, I'm not too sure. But my view here is basically I want to mention to all of you here basically is go back to 24 of February 2022. How the war, when actually the war started. The war actually started on the 24th of February. Okay, so it's a winter period, and the attack actually come from all this angle here. Okay, my point basically is Russia, okay, recently before the war happened, is roughly Russia actually have about 400,000 soldiers. Ukraine is about 200,000 soldiers, but right now it's about 100,000 Ukraine, 100,000 Russia. But because the Russia actually, you know, added in another 300,000, so roughly about 400,000 the Russian soldier right now versus about 100,000 Ukrainian soldiers. So my point is basically is, if you look through recently, they already, you know, start to report all those tanks to the Belarus areas, and plus the northern part here, okay, plus the southern part here. Okay, so my view, okay, and they actually started roughly about I think August to September. So they need about 3 months training. So need 3 month training, and a lot of them actually ex-soldiers. So by December, and once actually, you know, the river frozen, okay, my view here is actually, you know, both sides may attack each other. So I'm not too sure whether the tank can actually pass through the Dnipro River, okay, because right now it's actually, you know, they actually separated by this river. So because right now it's actually, you know, the Russian troops actually retreated here. So by this Dnipro River here. So you ask me whether, you know, the Ukraine will fight until the Crimea area, or the Russia actually will fight back to the north and control the whole Kherson area. My view here basically is, if the attack comes from the north, and the eastern part, okay, with right now it's about 400,000 versus 100,000. Then the attack from both ways, because right now it's actually the Ukrainian soldiers basically focusing on the south and the eastern part. So the northern part actually not many. So if let's say they need to fight for both sides, almost three same like the February, then my view here is basically I expect December and January the war will turn quite ugly. My view here basically is prepare for the war to turn ugly in December and January. Okay, both sides, when actually river actually frozen, they actually may cross over already. Both sides also can. So who will win? I think based on the 400,000 versus 100,000, definitely Russia on the upper hand. But of course, right now, actually, some of the soldiers, basically, these are all employed soldiers by all these neighboring countries, especially Poland. They detected a lot of conversations, the phone conversations, basically, the radio, all this basically is all the Poland language. Okay, now, so if let's say that happened, what will happen? My view here basically, I think Putin actually won it. These 4 states only, Donetsk and Zaporozhye and Kherson. Okay, I don't think he won to attack. But once the December, January, okay, that means next month and January, these 2 months only. Okay, so I think the war may extend higher over here, over to over. Okay, then they are preparing already. Okay, so my view here is basically, I think that ultimately the ceasefire will happen maybe first quarter of next year. Okay, I'll explain to you why the ceasefire will happen. Okay, next thing is actually want to share with you is actually the Poland recently, the missile attacks. Okay, explosion killed 2 people. So basically it's over here. Okay, this part here. So basically Russia is over here. If you look at the attack just now, okay, there's no way that actually the Russia actually can shoot because the missile is actually the S-300. So there's no way can actually hit over here on the eastern part of the Poland. So, and you can see that immediately they all these leaders actually they're having meetings actually in G20. They Biden immediately a few hours only already came out and says this actually not done by Russian, because there's no way. So this is actually the defense missile, so definitely will not shoot by Russia over here, and the distance actually it's quite big distance from Russia over here. So definitely will be shot by the Ukrainian. Okay, but the Zelensky says no. His blame is actually Russia. Okay, in the end, it's actually the people look at it, it's actually Ukrainian, the S-300 missiles. So, but the way that the Zelensky immediately says, then the Poland also worried. So that's why this trigger on Article 4, okay, and worry about Article 5, the kind of things. Okay, so you can see that this especially all the NATO members, okay, the main one, okay, they are worried. So my view here is basically with this event, why Biden actually need to come out and say this, because they're scared they'll drag into the Third World War with Russia. Okay, and they actually have no control on him. Okay, so that's why a lot of recently the telephone conversation with Biden with Zelensky, the tone actually not that good as compared to last time. So, and they scared out of control. Okay, so my view here is, and basically after the midterm elections, the Republican control House, so a lot of things actually the support in terms of the financial support to Ukraine will be actually getting more difficult really, including the military as well. So I think if without the US support and the NATO members right now is actually quite cautious already, especially all these I mean the missile done on purpose to provoke to let the NATO to fight against Russia. So I think they if let's say the Zelensky the Ukraine continue to provoke to do this kind of actions, bombing the bridge all this. So I think they will lose all the support from the NATO's. Okay, the support will getting lower and lower. Okay, so that's why my view here is basically, if let's say the war happened in big scale in January and December and January, I think, and if I say lower support, I think then it will be tough for Ukrainian, and I think the war actually may end maybe first half of next year. Okay, maybe first quarter you will see some ceasefire already, which actually if you look at recently the actions by Biden, all this I think they're heading towards this direction already. Want to have ceasefire, NATO member as well. Now, after talk about Ukraine, that means our market affected by all this Ukraine, the story will end roughly maybe about first quarter or first half of next year. So, but before that, please expect the war actually to go in more severe before it ends. So most likely will be ceasefire. I don't think we'll have any peace agreements, because it's not fair to the Ukraine, to Zelensky, to accept any peace resolution, solve these problems. So because they actually basically you recognize the four states actually to Russia already. Most likely will ceasefire. Then next one will be talk about US and China. Okay, this actually the map to show to you that, of course, this actually happened in August, after the Nancy Pelosi visit to Taiwan. Okay, so my point basically is actually, if you look at here, the map over here, basically it's surrounding Taiwan already. As compared to earlier, we still have the middle line separate between separate between China and Taiwan. Now basically it's surrounding Taiwan, and every day nowadays the number of planes, the number of aircraft, actually fighter jet all pass through the middle lines, it's actually higher. So it's actually surrounding Taiwan already. Okay, so my view here is basically, and not based on what I say, based on the one report says, the Japan's report says, some news say that this portion on the eastern part originally actually don't have this area, but actually this area is actually later on added on by Xi Jinping. Okay, so basically my view here is basically stop, because if let's say the Japan or US actually want to support, give any aid to Taiwan, basically won't be northern part here. Okay, but you can see here this added on, and this actually economic zone of Japan, so it's actually added on. So my view basically is that China prepare to stop all the foreign interference in Taiwan. Okay, now why I want to share this slide, some of you may have seen this before in some seminars. Okay, I just want to let you know that one more time, that the US and China, especially on the Navy part, okay, you look at the total military, US and China, Russia's, okay, so look at the military, the Navy, okay, and the air, the Army active, plus the Air Force, all this. Basically, China is actually, if you look at the numbers, total personnel involved, all this involved recently, the Zhuhai, the exhibitions, military exhibition. Basically, you look through the J-20, so the fighter jets, all these, basically you notice that actually they improve a lot already, okay, as compared to last times. Maybe slightly lower than US, but they're almost at par already. Okay. Now, but because of the numbers actually higher, so these not weak countries. Now, so why I want to share with you this, because both of them actually meet recently in G20, okay, on the 14th of November, okay, and you can see that basically Biden actually this visit, he's only had one objective only, want to meet Xi Jinping only, because throughout the meetings, the 2 days, 3 days, basically he meet about only six leaders only, as compared to Xi Jinping, I think about 12 leaders. Okay, so then you can see that Biden actually really want to meet Xi Jinping. Then you may ask, for what purpose? Okay, And this actually, these slides basically to share with you that this is actually the White House official statement, not my statement. I can't extract it out from the White House. Okay, so I just extract out certain important point. Okay, so to China, the most important point is actually basically is the Taiwan area. Okay, so the US say that on Taiwan, the layout, no details, they say are not changed. The US actually oppose any unilateral changes to status quo. Okay, then raise an objection to the PRC, increasing aggressive on towards Taiwan, and I mean the peace stability across the Taiwan Strait. Basically, he want to mention this, and then of course that original meeting is about 2 hours. Okay, in the end, the meeting actually actually don't have to wait for translation, or actually on instant actually translations. The meeting ended about 3.5 hours. So basically, China, Taiwan is actually the core of the core interest. Okay, and if let's say, because later on you will see the official language, official statement by the China, okay, and which the US actually never say that actually, the Biden never say that. Okay, so that means Biden actually did say that during the meetings, because it's actually the official statement by China. Okay, so and they can last for 3.5 hours. Basically, if you look through the tone, basically, they say it's actually constructive meetings. Okay, so have an in-depth that kind of discussions. So basically, in short, is the Biden say things that the Xi Jinping want to listen, especially on Taiwan, because this will be the time bomb for next year, especially on the new Taiwan Act that going to be passed through House and Senate next year. So it's actually key risk. If I say pass through it, Senate and House next year, plus if Biden actually approved the new Taiwan Act, basically it's recognized Taiwan as almost as independent country already, almost, but not yet. Okay, so then you ask me, if let's say Biden actually signed the new Taiwan Act, basically I would say the relationship would immediately turn back. Okay, China will call back their ambassadors in US. Okay, now I share with you on the China official statements in these areas. So Xi Jinping says, okay, the Taiwan is actually, this is actually not my statement. This is actually all extracted out from the China official statements. Okay, foreign ministry. Okay, core interest of core interest, 核心中的核心. Okay, China core interest only got one, only Taiwan issues only. That's why nowadays all the countries want to talk to China. Basically, the first words need to talk about, they have support one China policy and all this, because the Taiwan is actually the most important issues dealing with all countries in the world. Okay, so if you want to talk to China, you must state this Taiwan, the one China policy. Okay, and then Biden says do not support Taiwan independence and no intention to use Taiwan as a tool to seek the advantage on the competition with China. This is what the Biden said. Okay. Now, then the next actually, this actually the important part is actually the Biden said during the meetings. Biden says that the United States actually does not seek a Cold War with China, revitalize the alliances against China, support Taiwan independence, no to China. No to China, basically, it says actually, means that because right now it's Kuomintang in Taiwan, they say you can say your China, I can say my China, because one is actually, Republican of China, one is actually, another, the the Zhonghuaminguo of China. So, but with the Biden actually said no to China, basically is the Kuomintang statement is actually cannot stay anymore. Then they do not support one China, one Taiwan. This is actually from the existing Minjingdang, one China, 一中一台. So one China, one Taiwan. So with this statement basically means that the Democratic parties, Minjingdang in Taiwan or Kuomintang in Taiwan, their statement actually also cannot hold. So it means that we'll go to the Xi Jinping one country, two systems, 一国两制. Okay. So that, and Biden actually says no intention to have conflicts. Okay, no seek the decoupling with China. So you can imagine, once the US say all this, the things they actually know the Xi Jinping want to listen, you can see the meeting can extend until 3.5 hours. Okay, and they can talk about all things. Because why? Once they want the assurance of the US actually on this area, because other things all can be accepted. Okay, for example, to talk about do not support you Russian on the Ukraine. Use the nuclear weapons in Ukraine, North Korea issues. All this actually can be discussed. Climate issues and the AIDS or whatever. So all this can be discussed. And the key point basically, immediately after this meeting, you can see that the US and China relationship getting better. And you can see that a lot of investment houses, Goldman Sachs, all these suddenly upgrade on China stocks. So they turn very bullish. And their Blinken will visit China next year, January. Then after that, immediately, right now they are having in I think Cambodia, the Wei Fenghe and the US, the defense ministers actually having meeting right now in Cambodia. So you can see that immediately the relationship getting better. So my view here basically, worst case maybe it's over already for China. Okay, market may be affected by some lockdown here, lockdown there. But my view here is basically they're going to open up the economies already. If you look through the recent 20 measures on the managing on this, how they handle on COVID-19 in China. So basically, you don't have to go to the centralized that kind of quarantine, and you can go home and quarantine the kind of things. So to me, they are almost same like our measure already. Of course, they are more stringent as compared to us. So my view here is basically the economy going to open up by next year, first half of next year. Just imagine if China, after Chinese New Year or before Chinese New Year, suddenly allow this economy to open up. So will be a big boom in China economy. Okay, my view here basically is on conservative IMF forecast roughly of 4-5%. If let's say really economy open up, the economic growth in China may be higher than that. Okay, so that's why you want to invest. That's why you can see that investment houses right now, especially the US fund houses, they say they're bullish on the China stocks. Okay, so later on maybe you can spend some time and look through what are the core warrant available, okay, for you to invest, okay, for China stocks. Okay, now why suddenly you can see that a lot of leaders actually want to meet Xi Jinping. You can see that Germany economy is actually going to be a recession next year. US quite low. UK also almost negative. Okay, so a lot of countries actually facing slower growth next year. Okay, and their manufacturing actually slowing down, drop already. So if not careful, the US may actually, the world economy will drop into recessions. I mean the European side. Okay, so that's why things are getting tougher. That's why they need China help, especially where if let's say China economy open up, they need China that kind of economy to help them to pull their economy up. That's why everyone want to meet Xi Jinping. And Xi Jinping basically he got confirmed 5 years, so definitely he in charge may extend for another 5 years to 10 years. So to me, when you actually all these countries facing slower economic growth, so you want to do more trade with China to pull your economy out. Okay, now next meeting, FOMC meeting, will be on 13th and 14th of December next month. So right now the interest rate actually go up to 4% already. Okay, so what do you think? Okay, so why suddenly things change? Okay, in the US dollar actually plunged. Okay, basically the key issue here basically the inflation appear to be peaked already. Okay, I'll share with you shortly, and then basically US economy actually quite good, fundamental actually quite good. Okay. Now the projection basically is next year the US economy is roughly over 1%. Okay, and then inflation actually will come down. Okay, the Fed fund rates roughly about 5%. Okay, because right now it's already 4%. If December the Fed rate is actually increased instead of 0.75, only increased by 0.5, stock market will go higher, no? Especially tech stocks, tech sectors. Okay, basically tech stocks, worst case scenarios are maybe factored in already. Okay, now you can see that the GDP actually will come down. Then after that, 2023 actually will recover. Okay, then unemployment will come down. Will go up a bit next year. Then after that will come down. Inflation is actually peak roughly, peaks actually this year. Then next year actually inflation is coming down already, including the core inflation as well. Okay. You can see the interest rates. This is actually voting by the members. Basically, majority, about 18 of them, basically the peak roughly, but next year is about 5%. Then after that, they're trending down already. So that's why when you see all this, you can see that once actually the inflation start to have peak, then you can see the US dollars actually coming down already. Okay. Now, then you see why is recent event, why when they actually US actually announced their inflation rate, I think it's 10 of November. After since then, the stock market jumped like mad. Okay, why? Because in fact, US inflation is on the trending down already. Okay, but the key issue here is actually the last month, the inflation actually, the core inflation still go higher to 6.6. That's why the stock market plunged. But the recent one on 10 of November, the core inflation dropped to 6.3, and then the overall inflation is just coming down to 7.7. So as a result, the overall inflation is actually coming down. Then they start to see that the interest rate don't have to go up to 0.75. They maybe need to go up to 0.5 only. So that's why immediately the stock market just jump like mad, especially tech sectors. So when the interest rate continue to go higher at a slower rate, stock market will go higher and higher until when? Until they reach the peak of 5%. Okay, then the stock market will be at peak already. Okay, so please take note of that. Okay, and oil prices coming down already. Okay, so 3.876. Okay, then this is actually the forecast by IMF. Okay, basically you can see that they each time the updates you see they basically what they try to say is actually they know the inflation is going to come down next year, but they don't know when actually the peak. That's why you continue to revise higher. Okay, because of this war. That's why I initially shared with you on the Ukraine war. Okay, because that will affect the overall the inflation environment because of the oil prices. Okay, so and also affect the commodities, because if let's say it turns very ugly, then some soft commodities will be affected, like soybean oil, the wheat also affected. Okay, so that's why I need to explain to you. Okay, if let's say Odessa area also affected, then you can see that our soft commodity will go up higher, the wheat, all this. So you ask me, I think maybe not. Okay, I don't know what is the scale when like I mentioned to you earlier, the December and January, when the Russia had a big scale of fight back. Okay, I don't know how bad will be the situations, because they will affect the global inflation. Otherwise, if let's say they start to talk about ceasefire, all this, then commodity will plunge already, especially soft commodity, and oil prices actually will start to come down already. Because before war, oil prices only about 50, 70 levels only. Okay, so I think that we're trending down already. Okay, you can see the oil prices is trending down. Okay, so unless the China opened up, okay, then you can see the oil prices will jump up. Okay, and which likelihood will happen next year, probably first quarter, because China's start to loosen up already. Okay, so of course they wait and delay. Okay, so but just like recently, the Beijing actually got one person there. Suddenly, everyone's scared. The market also scared. In fact, if you look through the number of deaths per day, in every country, including Malaysia, the numbers are much higher than this. Okay, and you can see that the moment that the inflation start to peak and start to slow down the increase. You see the US dollars plunge, including ringgit, also plunge to 4.5 from 4.7 something, right, against US dollars. So basically, why like that? It's all because of this part here. Okay, earlier part, because of the war happened, oil prices higher, then inflation higher, then they need to increase interest rates. So you have this demand, and because US a lot of stimulus packages, then boost the economy to go up higher with the demand pull inflations plus cost push inflation. That's why the inflation out of control, getting higher and getting higher. And inflation getting higher, then as a result, you need to increase interest rate higher. Increase interest rate higher, then US dollars will go up higher. Then all the currency in the world all will go lower. Of course, because that's why this year, rich people, all the fund houses, very easy to invest this year. Why? As long as you're rich, then you put the money in US dollars accounts with the current accounts. They pay you high interest rates, and because you're holding US dollars and the strengthening US dollars easily, you can actually make 20-30% from there. Okay, at least 20%. Then plus higher interest rates. So basically, good returns. Okay, but the issue here is US right now attract a lot of hot money to the countries, putting money in US dollars. But once your people start to see that you're actually the interest rate peak going to come down. I mean, people start to see, hey, your interest rate going to peak, inflation peak already. It's going to come down. Okay, and your core inflation start coming down already. Immediately you can see that the sell down happen already. Okay, because these are all hot money. Okay, so they place with you, but once you're going to peak interest rates, and then they start to come down. Okay, then all this will withdraw it. Okay, that's why my view here is basically this situation will be similar to like in 1980s, the Plaza Accord. Okay, during that period, Plaza Accord, if you remember, in 1980s, because of high inflations, interest rate need to increase higher and higher. That's why the US dollar is getting stronger and stronger, stronger and stronger. Then after that, the US says, want to intentional devaluation of US dollars. So one they says that, they're planning that, actually implement in 1985. So the US dollar plunged by 50% within 6-month periods. So my view here, basically, for all of you here, is that I expect US dollars may drop by, may not be 50%, maybe about 20%, okay, from the peak to the lowest 20%. That means if I say the peak to US dollars about 4.7, I think by year end next year, it may drop below 4. I mean 3 or something again US dollars. Okay, unless something happen in Malaysia. Otherwise, if I say in line with all currency in the world, I think most currency actually will appreciate against US dollars by, I'll say 20%. Okay, so within the next year periods. So that's why we prepare for this next year, because all this money that back over here, okay, is because your higher interest rates, and then you continue to increase interest rates. The moment people start to see that your interest rate almost at the peak, because you say about 5% only, and then after that, inflation going to come down, you may want to peak and then start to come down, lower down interest rates, right? Then the fund will just outflow, will go reverse back to all this emerging market already, to Europe, to Japan, to China, to Malaysia, emerging countries. Okay, so you will reverse. So and these are all hot money. So that's why, and will drop very, very fast next year. So be prepared for this next year. Okay, plunge. This actually show to you that the 1980s, the US dollars plunged 50% within 6-month periods when they talk about intentional devaluation of US dollars, Plaza Accord. Okay, so I will say we may have some mini Plaza Accords 2.0 next year. I mean to say the US dollars will depreciate. Okay, and bond yield wise, I will say also will come down. Okay, basically you can see that the bond yield will come down, inflation, interest rate come down, inflation coming down. So basically, the bond prices actually will go higher. Okay. Now, if you look through within, actually market is getting higher already. Start to factor in all this already. and Dow Jones already go up higher than the long-term 200 days moving average. So my view here will be, you ask me, I think worst is over, and the US-China relationship I think getting better. You can see that immediately, they're in the climax, in the Egypt also able to have some consensus over there. Then they also have a meeting over there, and then recently they have the Yellens and I think the Yigang actually have a meetings, and then they are talking about the Tai Chi also, So you can see that because after the midterm election, they don't have to talk about election already, and US economy next year will be a tough year. So that's why next year election will mean the US economy will be the crucial one, and the economy slowing down. So they need China help as well. That's why US need China help, especially on the trade, all this. So you ask me, will remove the tariff or not? Maybe. Okay. So I don't know, because next year is a tough year for US economies. So that's why I think, and given the relationship getting better, I think and China economy will be good. Okay. Once actually they open up the economies. Okay. If that happen, if let's say China really open up economy, like a lot of countries like Malaysia, all this. So you can imagine the China tourists start to come to Malaysia. Which sector actually will do well? The gaming, genting, all this will jump like mad. So a lot of countries, not only that, emerging countries, Thailand, Europe countries also will benefit by the China tourists. Okay, a lot of them is very, 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 very rich. Okay, so, and my view here basically is that Nasdaq actually will go higher once actually the interest rate start to near the peaks or slowing down. I think the Nasdaq will go higher. Then how about the soybean oil? In general, if let's say the war going to come to the end already, okay, I think the peak will be over. But at the moment they still on the uptrend. But I don't think it will go up higher already, including a palm oil as well. To hope that it will go up 7,000, I don't think will happen. But essentially, you can see that the peak will be over. But because of strong demand, I think it will probably stay about 3,000 levels, 4,000 levels. If let's say the war turn ugly in actually December, January, then the palm oil and soybean will remain high, 4,000 plus, 5,000 also possible. Okay, but after that, if let's say for throughout next year, 2023, I think it's actually on the downtrend already. If actually the ceasefire happens, that's why you need to look through when actually the war will stop. Okay, if you look back today, okay, that 5 years later, 10 years later, go back today, we're actually in the middle of the war. Okay, the war not ended yet. So that's why these actually need to consider when you look at your asset allocations, investment strategy as well. Which sector to invest in, all important, because we are still in a period of Ukraine and Russia's that kind of tensions. Global economy, basically by IMF, the forecast here basically is economy slowing down next year. Okay, US actually slowing down. The one China actually will forecast at 4.4. My view here is basically if China open up the economy, then it may be higher than 4.4 to maybe 5-6%. Possible. It's actually quite sad. Recently, if you look at the North Korea during the Halloween periods, more than 150 people, the youngsters actually dying. Okay, why? Because packed with people. You can imagine if China economies open up next year with 1.4 billion, the impact will be huge. Okay, suddenly everyone open up and drinking all this, don't have to wear masks, all this. So, and start going out from the country. So with recent measure already, the flight booking all jumped by almost 100% already. 100% already, not fully open yet. So that's why my view here basically is China will be very good next year. That's why buying China stocks. Okay, buy China stocks. Okay. So prepare for all this open up already. And Xi Jinping already got third term already. So he don't have to seek for re-elections already. So that's why I think the relationship getting better. I think China should be okay. Okay. You can see that the US and China recently, the tone changed immediately, and all their surrounding country also suddenly, all changed immediately, dealing with China as well. Okay, and everyone wants to meet the seed price, seed to seed. Okay, now ASEAN actually will continue to do well. Okay, about 5%. Okay, Europe, some actually drop into recession. The Germany's, okay. Italy also the same. UK almost dropped into recessions. Okay, UK quite tough. Now look at US economy. Okay, US economy basically, if you look through the initial claim on the uptrend a bit, okay, going up a bit, and then but the job data is actually on trending down. Okay, and recently, remember a lot of retrenchment in the tech sectors. I think the job data in the coming few months actually will not be good. Some says will be roughly reflected in actually December numbers. So after the December or January numbers, so retrench here, retrench there. The Amazon 11,000 retrenched. Then I think which one really? I can't remember the one. I think a lot of retrenchment lately. So then you have Twitter also. So I think the number actually will not be good in the coming few months. Downtrend. Then will not be good or no good for the overall economy. Of course, the economy will be affected, and indirectly that number means good for stock market. Why? Because earlier on, US actually facing that kind of demand pool, that kind of inflations. So the economic overheat, so they need to slow down, but not to turn into recessions. You cannot be too negative. Okay, then unemployment rate roughly about go higher a bit to maybe 4% levels next year. Then you can see the US GDP in general quite doing very well, 3.7, 1.8, 1.8. Overall, 2%, very good. Okay. Then you can see the third quarter actually very good, 2.6. In third quarter changes, 2.6%, analyze it. Then you may ask why the Biden actually still lost the House to Republicans, basically because of high inflations. But recently some recoveries. But in general, there are people suffering from the high inflations. Okay. Now, and in terms of retail sales, the year-to-year changes 8%. But if you minus out the inflation for 7%, 7%, the growth is actually not high. Okay, because these are actually nominal numbers. Managing orders are actually slowing down. That's why things are slowing down in US. Okay, that's why people actually forecast actually recession next year. Okay, that's why everyone. China number very good, so everyone want to meet China leader to talk about trade, to increase trade, to boost the economies. Okay, Germany also the same, France also, Macron also the same, Japan also the same, Korea also the same. Everyone, like Australia also the same. Everyone worried, next year economies. Okay, and US industrial production is slowing down. You can see the trend, and basically, with the loss of one house, basically a lot of bills actually need to review it, okay, by Republicans. So that's why Biden actually will have a tough time from next year onwards. So you ask me, basically he need to boost the economy so that if let's say he want to stick for re-elections, okay, you can see that the proof very high, still very high because of high inflations. How about China's? Okay, China in general, the third quarter GDP is very good. Okay, so people expect it. Fourth quarter will be even better because the economy is open up already. Okay, so next year will be better, even better. So my view here, basically, I think they should be able to maintain about 3%. Okay, so because fourth quarter maybe the numbers will be higher than 4%. Now overall will be roughly 3% this year. Then next year will be more than 4%, 4-5%. Okay, and some recovery on the manufacturing orders. Okay, in general, they actually on industrial production also getting higher. Okay, getting better. Of course, because of lockdown, they actually the retail sales actually affected. So just imagine if let's say economy open up, so of course the inflation, I mean the sales numbers will be better. Okay, now inflation actually not high, 2%. And RHB also recently strengthening because of in line with the weakening of US dollars. Okay, and Shanghai market also recovering. Okay, you can see there's a recovering in Shanghai market already. Okay, after recently, the change of sentiments. Okay. One good part, basically, pay attention to this Nasdaq Golden Dragon China Index. Okay, they actually dropped for those tech stocks, China tech stocks, Alibaba, all the Tencent. They actually from about, I think, 18,000, I think 19,000, dropped all the way down recently, I think below 5,000. Okay, but recently recovered for 6,000 already. At this level, already gone back to 2013 level. Okay, so my key point basically is the share price is actually very cheap. Okay, if you have holding power, buy and hold all the China stocks, okay, tech stocks, Alibaba, Tencent, all this, buy and keep for long term. Okay, the valuation actually quite cheap. Okay, but my view basically is I think the worst is over already. Okay, I'm quite bullish on China stocks. You can consistent with the same like Goldman Sachs, all this, the view on China stocks. So you can consider it, okay, or you can consider buying call warrant as well. Okay, I personally also invested in call warrant, China call warrant. Okay, these are the stocks actually, the Golden Dragon China Index. Okay, very cheap. Now last part basically is the Malaysia. Okay, yeah. Malaysia number later on, I'll share with you. Of course, today it's actually very tough. The question you want to ask me, basically, I also know you want to ask me who will become the PM. Okay, so I'll share with you later on. Stay until the end of the sessions. So I'll share with you who will be the PM. Right? You decide who will be PM. Okay, no, I decide for you. Okay, now basically you can see that we're actually quite tough. Okay, these actually numbers actually by the budgets that presented by Zac Chooi in the recent, I think October. Okay, not approved yet, but we'll give you the hint of recent Malaysian numbers. Okay, so actually our Malaysian numbers are actually not very good. Okay, budget deficits, okay, but lower, okay, lower compared to the peak. It actually in the 2021. Okay, we actually lower down next year to negative 5.5. Okay, but not sure with the new government. So because no longer it's actually in BN already, it's either PN or PH. So need to review on the budget. So this budget actually not approved yet. Okay, and based on the Zac Chooi, the earlier budgets, okay, basically we're going to have a budget deficit negative 5.5. Okay, the revenue actually will come down, expenditures, all this. Okay, now our GDP next year will be 4 to 5%. No, I say one, it's actually based on recent budgets. Okay, so overall, things in line, I would say definitely slowing down through. Okay, next year is actually a tough year because of the external environments. The European actually slowing down, US also slowing down, except for China will continue to do well. Okay, emerging markets, ASEAN countries do well, but in the European, if our products export to Europe or US actually will be affected. Okay, that's why it's a tough year for those manufacturing next year. Okay, export will not be good. Then we also have a constraint. Okay, so whether recovery construction sectors will depend. Then agriculture actually will slow down as well. Okay, so things actually quite tough next year. Okay, that's why 4 or 5%. This is actually quite good, 6.5 to 7% this year. Okay, then our debts to GDPs, okay, it's actually 61%, quite high, Okay, if you look at ASEAN country, we're actually one of the highest, Okay, so and remain very high, 1 billion, 1 trillion kind of debts. So and then we also have the kind of political uncertainties. Okay, they add on to this. Okay, then this actually budget 2023, not my numbers. If you look at Malaysia position in the world competitiveness, we're actually going to come down. Okay, if you're not aware, you actually can download it and have a look. Okay, we actually competitiveness continue to come down. Okay, I know why we actually like this. We don't have time to discuss on all these issues. Basically, this actually the report will say to you that why which area actually we actually ranking actually below par. Okay, like policies institutional business registrations, social framework, all these health, environment, educations. Okay, So these are below average. Okay. So, and we are domestic economies. Okay. So you look through it. The productivity and efficiency, we also not good. We have a lot of holiday here, holiday before voting also holiday, voting also holiday, after voting also think of holiday. So you already want to have so many holiday. Okay. This season also, this festival also have a holiday, that one also have holiday. Football, win football also need holiday. So tough. Okay. So that's why you look at the service sectors, okay, overall, services basically, about 5% growth next year, okay, come from the food, transport, okay, wholesale, all this, and then plus other services. Then in terms of GDP, I said next year about 4 to 5. So this is actually prepared by the Zac Chooi before he stepped down. I mean, likelihood the new finance minister are likely from BN already. I don't think so. Okay. So I'm not too sure who. Okay. And they need to pass through these budgets or review these budgets. Okay. Then how pricing actually coming down overall, slowing down. We oversupply of the houses. You can see the oversupply on houses. Okay. And the SDC stock getting higher and higher. Okay, oversupply, overbuilt. Then in terms of the spending, aggregate demands, then supported by the private expenditures, okay, and the domestic actually demands. Okay, external sectors actually next year will be tough, 3% only. Okay. And our non-performing loans is getting higher. Okay, so take note of that. Okay. So some of bank profit still will be affected. That one need to take note. Some are that's why some may provision already provided. Okay. This is actually our third quarter numbers. Third quarter GDP very good. Okay, by Bank Negara. This is actually from Bank Negara. So 14% very good. Okay, that's why 8%, 9%, 14%. So you a lot of us miss the BN periods. So because right now it's only have either PH or PN only. Okay. So these PN numbers. Okay, see, economy very good. Okay. Expansions, all these labels. Seriously, we're actually doing quite well at GDP's in terms of GDP's numbers. Okay. So construction growth 15%, minings, then you have services 16% year-to-year changes, manufacturing. So this, of course, is a low base last year. Okay. So economy open up, of course, contribute to all this consumption, all this. And of course, inflation is getting higher, but based on Bank Negara, I think it's roughly about 3% levels next year. Okay, may have peaked already, so it will trend down later on in line with the overall the oil prices actually coming down worldwide, also the same. Our ringgit actually not doing very bad, against US dollars. Okay, drop by 11%, but if you compare to Japanese yen, pound, all this, so we actually quite okay. That's why our Malaysia fundamental quite okay. Okay, so whoever become the new prime ministers, hopefully, will boost the confidence. Okay. Industrial production slowing down a bit recently. Then manufacturing trending down. Okay, you can see trending down. Slowing down already. External demand actually slowing down. Inflation roughly, also peak already, trending down a bit already for Malaysian inflations. Interest rates. Okay, so banking sector will do well next year because we have high interest rate this year, 0.25, 0.25 every 2 months. So the full 1% impact will be felt next year. So that's why banking sector, I think the profit will be good. Okay, so they should be able to pay higher dividends next year. Okay, for those. That's why in general, and interest rate may go up higher again, 0.25 to 3%. Basically, these are normalization of process. Okay, but banking sector actually will benefit from high interest rate environments. Okay, Malaysian ringgit recently drop. Okay, in line with the other currencies. Okay, 4.5. All currencies also strengthening against US dollars, not only ringgit only. Bond yield also start to trending down already. Okay, in line with the overall thing, the bond yield actually start coming down already. Now, I mentioned to you just now, the talk about the elections. Okay, this is actually the I took from the PRU websites, official election websites on the Malaysia's by all these parties, the numbers I took from there. Okay, the dashboard there. Okay, so I'm not too sure my calculation correct, not correct, because these are official numbers. I'm not too sure because the one that actually they presented to Agong, I don't know what's actually the numbers. Okay, but basically from what they say, okay, PH actually got these numbers. Okay, if you add up together, roughly about 85. Okay, then PN blocks, if you add PN, GPS, PAS, GRS, PBAS, all this, assuming all these, it's about 105. Then Agong actually will interview individuals next year. I mean tomorrow. Tomorrow 10:30. So one by one, these 30 of them. Okay. So these 30, if all of them support 85, then 115, then of course PH actually, the prime minister will be announced. Then if let's say 30s go to here, the PN, okay, then we'll get 135 will be quite high numbers. Within become the PM. Okay, and this actually, not too sure which one. Okay, so you what do you think? Okay, if let's say our Agong actually will interview one by one next year, tomorrow. Okay, 10:30, one by one. What do you think? Who will get? So my view here basically any split of the numbers, then of course within the chances are higher because the numbers actually he gets 105, quite close to 111. So they need a few only. But for PH, they need more from the unknown. So of course, so I'm not too sure. Okay. So you decide. Okay. So but my point basically is remember these numbers. Next tomorrow, if any split want to get 111, 112, roughly they need 7 only. Okay, but here they need more than that, about 20 over. So one is actually they did 7, one is actually they did 20 over. So you think how? So your answer also will suit my answer. Okay, I also don't know. Okay, but my point basically is before the elections, I already know this answer already. Okay, I already mentioned to people that we're going to have this. This is actually the poll by this website. Okay, when they actually started not long ago, I already noticed that BN only was 11%. So basically the youngster actually not supporting BN. They're all BN. So between PN and PH only. And these numbers I already know. So none of them more than 50%. So we'll be like in line with this. Okay. So how? It depends. Ultimately, these 30 people will decide. How? I don't know. So basically the split the BN over here to get to PN or PH. So I don't know. So wait for tomorrow's. Okay. So last 2 slides here basically is the one is basically if PN, okay, then people in general the view is actually more towards on conservative. Okay, so not like business, pro business. Okay, so if you look at our top 10 years trend, we're actually on a downtrend. This is actually my last slides already. Okay, so it's actually on a downtrend. So if let's say more conservative, like Muhyiddin, okay, basically you look at Muhyiddin periods. Okay, of course cannot blame him because at that time it's actually the COVID. But you look at the Islam Sabri periods, the UMNO periods, BN periods, actually economy doing very well. Okay, but in general, you can see from here actually we actually in Malaysia early on share view rate competitiveness, everything is actually lower. So and our election also get attention by CNN, Bloomberg, all this. So my view here basically, whether it can give confidence, whoever become PM tomorrow. So I'm not too sure. But I mentioned to you that if that need to be pro-business, otherwise we actually still on a downtrend. Okay, it may break below 1,004. Okay, if let's say they cannot give enough confidence to the investor, may break below 1,004. Okay, it's actually on a downtrend. Okay, so hopefully good news. Otherwise, short-term wise, Malaysia wise, if cannot give confidence to the markets, then the downtrends continue with the downtrends. Okay, so that's all. my presentation for tonight. Okay, pass back to Xuan.
Thank you so much, Mr. Ooi, for sharing with us the global economic outlook, the global market outlook, as well as the Malaysian economy and market outlook. So next up, I would like to invite Mr. Zac Chooi, who is the head of Origination of Equity Derivative Group from RHB Investment Bank, to share with you how do you use structured warrants to trade the black swan event, what to watch out for, and what are the other asset class warrants. All right. So let me hand over the session to Zac. How are you, Zac?
I'm good. Thank you, Shane. Thank you, Mr. Ooi, for the session earlier as well. And good evening to everyone. Thank you for dialing in. I think without further ado, just let's start tonight on some structured warrant sharing from ourselves. So first of all, a quick disclaimer. Some of the names mentioned during the presentation are not meant to be by a sell recommendation. But if you think, some of the themes or some of the ideas generated or shared by Mr. Ooi earlier can complement with some of the slides that I share, maybe you can use this combination of information, to position your portfolio heading into next year. Yeah. Okay, so the presentation today will split into 3 parts. All right, so first one, we're going to do a very quick recap on how should you trade warrants, a very basic strategies what to do. Second one, the right way to do things. Basically, I'm going to show you some examples of, some of the common misconceptions that I see in the market, some of the way too common strategies that people practice. And lastly, as Mr. Ooi shared earlier, he's very bullish on Chinese stocks. Right, we're going to share with you some warrants that can allow you to gain exposure to this kind of a Chinese stocks that Mr. Ooi mentioned earlier. All right. So the first part, strategy. I think a lot of you have probably attended a lot of structured warrants sharing by various issuers during the past 3 years as the structured warrant market really that heated up in 2020. It's died down a bit recently, but we have done a lot of sharing ourselves and our competitors. So I think you probably have heard of some of these terms already. All right, so just a quick recap, some theory and things that you need to know. All right, some common terms in structured warrants that you must remember. Sensitivity, right? How fast a warrant moves. Basically, how much does it track the mother share? You don't want a warrant where the mother share is going up and then your whole warrant is not following it closely. Effective gearing, how much the warrant moves, right? So the percentage, the times that you get. So when the mother share move by, say, example, 1%, will your warrant move by 4%, 5%, this kind of movement. And lastly, time value, how long does the warrant last? Basically looking at the expiry dates of your structured warrants. All right, so this is a basic 5-step approach that us here at RHB would like to recommend to our clients and our listeners. All right, so first of all, the most important function, all right, look at the mother share. You don't buy a warrant unless you have a very clear view of the mother share. Doesn't have to be bullish, right? You can have a very bearish view on the mother share as well. Nowadays, there's a lot of put warrants in the market, even though at the moment RHB don't issue it. Secondly, issuer, right? Think of the transparency of the issuer. Does the issuer publish a warrant matrix or any guidance for you to, time your trades with take profits and stop loss levels? All right, so a warrant matrix tool that RHB Warrant publish is a tool, that helps you to do that. Thirdly, take note of the expiry of the structured warrants, right? Remember that structured warrants expire and you must know when to, how to time your trades properly. And then remember your sensitivity and effective gearing, the terms that I shared earlier. Pick one that suits your need, pick one that suits your strategy, right? And then lastly, just go to your trading, okay? This is a very quick recap of warrant trading strategy. And these are some of the tools I think we previously shared. If time permits later, we'll go through some of these tools on structured warrant trading as well, how to find all the warrants in the market and how to decide which one is better. All right, I'll be more than happy to share later, maybe during the Q&A, if you have one name that you want us to cover. All right, so one of the main things I want to share today is actually on this slide here. Right, so for example, hibiscus during the Ukraine and Russia war, oil price shot up, and then hibiscus, Heng Yuan, Dayang were becoming very popular names in Malaysia again, and structured warrants were getting a bit more common with these underlines. And then as you can see here on the screen, there are a lot of structured warrants outstanding right now on hibiscus. All right, so let's say you want to trade hibiscus and you thought, I'm very bullish on oil price from this point. Which hibiscus warrant should I choose? All right, so looking at all the columns here, I have included a couple more, but these are the more common things that people look at. So what people usually look at, right? The first column that everyone here probably was looking at is probably a premium column, right? Look for one that's low premium, and hopefully make money from there. The second one, this one was especially a good question asked by some of the listeners in the event that we did last week, right? So people are asking, is in the money warrant better than out of the money warrant? We got a few questions on that. So I thought, it's interesting that people are also looking at moneyness these days. Third one, right, bid and ask price. This is because a lot of people like to hunt for cheap warrants, right? A lot of people think, half cent, 1 cent buy already, at most lose 1 cent, right? But if you go to 2 cents, wow, 100% gain, buyer, right? So this is a third strategy that people go for. And lastly, some people look at the trader volume. If the trader volume is low, people think it's not good. When the trader volume is high, people think that high demand means good stuff. All right, so does this strategy work, and what is a possible pitfall when people use this kind of strategy when trading structured warrants? So this is what we're going to share with you today. All right, so these are some of the strategies. So the first one, this is the most important, right? So, and also because we have seen a lot of sharing on social media, a lot of clients calling us saying that they were advised to go for negative premium warrants, or they're advised to go for very low premium warrants, right? And some of them actually did not make money because how it was termed, as they told me on social media, some of these gurus told them that negative premium warrants is free money, right? How come I did not get the free money? In fact, I lost money when doing that. Okay, so I'm sharing with you that this is the formula to calculate a structured warrants premium, on the screen here. So looking at all these terms, when you see a negative premium warrant or very low premium warrant, what does it actually mean? Right, so I've actually broken down the formula into 3 colors here for easy reference. The first part is call warrant price times exercise ratio. First of all, this term will always be positive. Right, the purple one will always be positive because call warrant price cannot be negative. The exercise ratio will always be positive. So this one cannot be negative. The next one is where the negativity will come from. Exercise price minus underlying price. And let's say we're looking at a call warrant. This could be negative when the call warrant is in the money. Right, say the call warrant is very, very deep in the money. Right, so it is possible to have a negative premium in this case. Underlying price, again, as usual, does not go negative, the blue part. So for the negative premium to come about, the red part really have to be very, very negative. But is it possible, and why would structured warrant issuer price a warrant so much that is it because it's very deep in the money, I can buy it at and get a free returns for nothing? Is it even possible, or is there something wrong? So if we go back to the screen earlier that we were looking at, one particular warrant stuck up here. That's a negative premium warrant here, right? Negative 35.8%. Okay, and until February next year, holding it for a few months for a 35% return is not bad, to be honest, right? It's very good returns, and it's almost for sure that you're going to make this. So is it even true? Okay, so sharing with you, looking at this particular warrant, what has gone wrong here is I personally have checked. All right, so the issuer for this particular warrant, Bank, has uploaded onto the information portal, in this case Reuters, a wrong exercise price. Right, so exercise price is actually 160 instead of 60 cents, which means the premium was calculated to be negative because of this error. All right, so because it's not due to it not being an RHB issued warrant, so we cannot comment or say too much about it. But if you are an investor, this is what we want to caution investors. If you are an investor, you saw this and you did not vet or check the values properly and just thought, whoa, free money, and bought this warrant, you have been for a railroad short, because this warrant particularly was trading around half cent and 1 cent. You have bought a 1 cent warrant and held it till maturity next year, expecting to make a 35% negative premium, and nothing happened. In fact, you will have lost money if you held it to maturity next year. So this is some of the pitfalls. And okay, so why does negative premium warrant? This is the first time. This is a very rare or one-off incident where there's a mistake by the issuer in uploading some of the info. Okay, but there are also other times where there's a very small negative premium, maybe 3% or 5%, especially close to expiry. So are those warrants worth investing in? Okay, going back to our formula earlier, right? Could this negative premium come about? It's very possible, again, if it's very deep in the money and most of the warrants value is dominated by the term in red here, and there is something called a mispricing. All right, so this mispricing could be because of at the moment market traded, or there's already traded at an off fair price value. So the fair price could be 5.5 cents, and because the issuer is either not market making effectively, or there are some investors who are matching trades on the platform, trading platforms, that is slightly out of the issuer's bid and ask queue. This could actually happen. But chances are, if you bought it at this small negative premium, right, you may not be, first of all, you may not be able to execute your exit trade effectively because of the low liquidity. So one of the first way of this small negative premium condition to happen is there's a very low liquidity provided by the market maker, the issuer at that point. And then the trade was matched at a slightly off market price. These are always not ideal situation, especially at close to expiry when you want to get in and out of position. So holding it to maturity usually will not result in you, yourself, the investor, making money. It's also because, first of all, the low liquidity, you have to hold it to maturity. And when these issuers have to unwind their hedges, right, more often than not, they have to sell the shares that they're holding. This means that the share price will get depressed downwards slowly, and the VWAP or the closing price of the share that's used to calculate the settlement will get pressed down. So my overall advice is, when you see a low or negative premium warrant, always proceed with caution, right? Especially when the negative premium warrants very likely will show up close to expiry date, meaning that you're trading a very, very close to expiry kind of structure warrant, right? Don't go for those, okay? Be very, very careful. And the last thing I would like to bring to attention is, when trading warrants slowly based on premium while disregarding the other parameters, including expiry, including effective gearing or sensitivity, could bring you to a mistaken concept of time value. So time value, as I mentioned earlier, is time to maturity of a structured warrant, right? If you are solely avoiding warrants with high so-called premium, you could be just simply avoiding a structured warrant with a very high time value. High time value means that it has a long time to expiry, hence the premium is a bit more expensive, right? So if you're just simply avoiding those and go for low premium, you could just be going for very low and short and close to maturity kind of warrants. So never base your trading strategy based on this. Always look to the overall specs of the warrant and pick one that suits your need in this case, okay? And the second thing, I think just want to share with you, is a lot of investors actually base their trading habits on volume, right? If a warrant has millions of traded volume, means that this one is probably better than the rest. Okay, and this is a very simple thinking. If no one's buying the structured warrant, means something is wrong, or something's very going on with this particular name. That's why people are rushing into it. Right. So just want to share with you, first of all, that's not necessarily true. Second thing is that a lot of the time people think that no traded volume means there's no liquidity, means that I cannot get in and out of a position. So comparing two warrants, A and B in this case, right? Warrant A only has 11,000 unit traded volume, but look at the queue, buy and sell, bid and offer volume here, right? The market maker, the issuer, is actually bidding 500,000 units on each side, which means you can buy and sell rather easily for this particular warrant A. Meanwhile, warrant B, although it has a 5.23 million traded volume, right? But look at the bid and sell queue, right? You cannot get in and out easily. And look at the bid-ask spread. Instead of a half-cent spread, we're looking at 2-cent spread here. So by two different measures of liquidity, warrant A is way more liquid compared to warrant B. So if you're just looking at traded volume, you will be misguided in this case. Okay, so these are some of the common pitfalls. So just looking at premium is not good. Looking for low or negative premium may not be the best idea. Always look at the overall specs of the structured warrant. And the next thing is, don't just look at the traded volume. If you want to see engaged liquidity, look at the buy and sell volume queue, right? What's on the queue. And third one, I think this one has a lot to do with what we heard earlier from Mr. Ooi as well, right? Very bullish China stock. And I think after what we see happening in Malaysia over the past few days, we are also probably not very optimistic about what's going to happen in Malaysian markets next year. So if China is an opportunity, is there any instrument listed on Bursa Malaysia where retail investors like us don't need to open a foreign currency account or exchange foreign currency, or go to Hang Seng and spend tens and hundreds of thousands to buy one lot of a Hang Seng listed stock, right? Is there an instrument like that? In fact, there are. Okay, so listed on Bursa Malaysia are some Hong Kong stock warrants that RHB warrant team has brought to you. In fact, back in 2020, we were one of the first to bring all these Hong Kong tech stock warrants over. That was prior to the shelving of IPO of Alibaba and Group back then, right? So if you were following us since that time, you probably have noticed that. So Consequently, now these are some of the more longer dated names that we have on the market right now. So as shared by Mr. Ooi earlier, if you are just generally very bullish on China market, you could look at something like A50 China. So A50 China is referring to an index listed in Hang Seng, right, that tracks the top 50 corporations listed on the Chinese index. A means A stocks. A stocks are the ones that traded in China. Meanwhile, certain names are dual listed. They're listed in China and Hong Kong. The one listed in Hong Kong is called H stock. Yeah. So the A50 China index could be one of the instruments you're looking at. Or if you're looking at the tech stocks, like Mr. Ooi just now mentioned, by using the Nasdaq Golden Dragon Index as an example, it's very low price, very low PE, very undervalued. If you think those your thing, you know, we have Alibaba, we have Tencent, Xiaomi, you know, these are the so-called ATMX stock of Hong Kong and China. They are all standing to benefit from the rebound in consumer behavior in China, right? So there are internet platforms that does retailing. Alibaba needs no introduction. Tencent, WeChat, and a super app, right? Xiaomi, the handphone vendor, and also does a lot of other smart home devices these days. Also worth noting, BYD, who recently overtaken Tesla and is now China's #1 EV seller, right? So they are selling a lot of electric vehicle, which is a very big agenda of President Xi Jinping in China as well. So if you're looking at electric vehicle names, maybe you can have a look at that. And Sandabi Motors is bringing in BYD models, and they look very nice. So if you're interested, maybe you can have a look at those as well. So for investors who are more bullish on Hang Seng tech names, right? So one of the ideas we can share with you is a HST ETF C3. It gives you a leverage return based on the Hang Seng Tech Index, right? This is for ETF underlying, okay? And if you are very, very bearish on overall market conditions next year, we can even have structural warrants that's with a gold underlying. There's a gold price structural warrant that tracks the gold price very closely. So this is something that you could look at as well. All right, so feel free to take a screenshot of this particular screen if you know some of these names interest you, and feel free to drop us a message during Q&A or email after. So we can discuss this further. This is sales hotline, 9 to 5, as long as no sudden holidays in the coming few days or weeks. Right, you can always find me there as well. Okay, and if you like to hear more from us, feel free to join us on our Telegram channel. We do frequent write-ups on this channel to share market news and various updates about our warrants and global market updates as well. Okay. So thank you very much for your time. I'll now pass the mic back to Shane.
Thank you, everybody. All right, so now we want to move on to our Q&A session. So if you have any questions, ask Zac or ask Mr. Ooi, you may write your question in the Q&A box and we will address them accordingly. Of course, we only have very limited time. So if we are not able to answer all questions, so please, accept our apology first, okay? All right, so I think there are a couple of questions to ask about the prospect of the recession next year. So Mr. Ooi, I think you will be a better person to address this question. Do you think that there will be a global recession next year or even in 2024?
I don't think I think Europe side will have a tough time. Okay, certain countries may have a recessions, like Germany, if we're not careful, UK. Okay, but the rest, I think, it depends. Okay, the overall, when actually the whole thing, the Ukraine and the Russia conflict still will end. Okay, they are affected by the energy prices. Okay, even though it's coming down already. So basically, they hope the war will end as soon as possible. Then I think so that they were not affected by all this. The inflation actually will come down. So my view here basically, but I think if you look at Asia Pacific country in general, we're actually doing quite well. China also doing well. So it depends on whether you look at the Europe side. Then for US side, I think they're actually trying their best actually to revive their economies. They also feel that things are actually slowing down. So I think if let's say China open up, the economy open up, I think they will, with the China GDP of 17 trillion, I think will pull the world economy up for a while, a bit. Okay, really will boost the world economy, especially if let's say China tourists will go to Europe to buy handbag, all this. So I think hopefully China open up soon. Okay, I think will happen. Maybe roughly, I think one question. I think roughly maybe first quarter, March. I think the 两会过后, after the 两会, I think it's, basically it will happen already. Okay.
All right. So what do you think about gold as an instrument to help us to weather through the any possible recession?
Given the US Treasury is coming down, okay, I think I mean the interest rates coming down. I think it's good for the gold. Okay, notice actually gold prices should go higher. I think the recover recently. Okay, I think, but if you ask me, can go very high. More until today, I think unless they have a more geopolitical conflicts, otherwise I think they can't say even. I think in general, I'm quite bullish on the stock market next year. When actually things are peaked already, they start coming down, then the interest rate actually will start to come down. Basically, the tech stocks actually, all the stocks actually not doing well this year, I think will perform well next year. Okay, so in general, I think the stock actually will perform better. I think bond also will recover as well. The bond yield actually will come down. Bond prices will go higher. So I feel that I think invest in equity or bond actually will be better as compared to invest in gold.
All right. Mr. Tay would like to ask, I think I shall post this to Zac. When buying warrants, how many days to maturity of warrants should we choose?
Thank you for the question. So I think, Mr. Tate, my first advice is, of course, to look at a lot of different kind of parameters rather than just at maturity. But as a guiding rule, if you see a lot of other specs you check already and it's something that you like, then your only deciding factor, everything else equal. So your final deciding factor is days to maturity, right? I think always remember that time decay referring to the time value that you lose by holding on to the warrant, right? So time decay is most severe at the last 1/3 of the life of a structured warrant. So meaning if a structured warrant is issued over 6 months, the last 2 months of a structured warrant will have the steepest time decay. So this is something to take note of. Imagine you're holding on to a structured warrant, the share price didn't move, but because of time decay, you're losing every half cent or 1 cent every few days or a week, So this is the kind of thing to watch out for. So when you are earlier on in the life of the warrant, this does not happen as quickly, but as it moves closer to expiry, these tend to happen. So the key here is to make sure that if you are holding on to the warrant at the last 1/3 of the life, let's say the last 2 months of the structured warrant, you have to be so sure of the up move in the mother share price that the leverage effect, the additional gains that you can make from holding on can offset the time decay. So if you can't, it's always more sensible to go to another or just sell and buy another structured warrant that is probably going to give you less time decay, provided the specs are right for you.
All right, thank you so much. Okay, the next question is by Yong Jun Fa. So, Mr. Ooi, what do you think about the ringgit performance next year against the US dollar?
As I mentioned to you that I think the US dollar will continue to weaken against all currency in the world. So I think the peak is actually over already. And given the interest rate likelihood will slow down the increase, maybe by FOMC meetings 13 and 14, maybe only 0.5. Next year, January, maybe 0.25 and slowing down, then the US dollars actually will going to go down further. So then ringgit will strengthen to maybe 4.3. Then if I say Malaysia economy is doing well next year, okay, just like based on the budgets, then will be below 4, okay, next year against US dollars. Okay, so because actually when all this hot money flowing out from the US current account, all these the flow will be quite fast and quite fierce. Okay, so within short period of time. So I will not be surprised when the US dollars actually strengthening. I mean the ringgit strengthening against US dollars below 4, unless anything happen in Malaysia politics, which I don't know. Okay, otherwise should be. If I say whoever become PM give confidence to the investors, all this, then Malaysia should be okay. Okay. Seriously, nobody knows what will happen tomorrow.
All right. Now, with the inflation in America going lower, will there be an earning crunch to the US companies, thus creating further downtrend in stock price?
I think all the bad news all factored in already, especially the tech stocks. You can see Meta drop out, I think 400 dropped to 100, so by 70%. So I think all the bad news actually factor in. I think some actually may ask about the all again China on the tech sectors, all this. I think the tax measure, all this. So basically, the US is also suffering. So based on the way that you see, and the US and China, the China's actually, the main people actually, facing the US actually, when during the Biden and Xi Jinping, basically it's all on the security issues. But you notice that do have Yellen. Then Yellen actually tried to talk to I think the Yigang, so China Central Banks. So I think they actually want to boost the whole things and boost the economy. I think overall, I think the tech sectors, the worst is actually over. I believe that the factors, the share price all factor in all the bad news already. Okay, and I believe that the overall actually will recover.
Okay.
US as well, the Dow Jones, the Nasdaq as well.
Right,
a lot of these already factor in all the bad news already. Okay. I mean, meaning to say, the share price already factor in the potential recessions or slowdown economies.
Okay, thanks for sharing your perspective. So the next question is by Kyung Cheng Yo. What is your view on the US semiconductor ban that was imposed on China?
Like as I mentioned to you, that the key thing here is basically very high end only of all China will be affected. But if you ask me whether on military, China military or China EV car will be affected by all this ban, I don't think so. Okay, they are not using the kind of high end chips. Okay, and all those right now, China able to produce the 14 nanometers. I think the 14 nanometers and below, and above, they are all okay. China actually able to produce. That's why I don't think the EV cars will be affected. I think the military also will not be affected. So, but of course, the AI part, those high end on those 5 nanometers, 3 nanometers, then China are able to produce it. Of course, will affect us. Okay, so I believe that certain measures, they want to have stiff competitions, okay, but they don't want to lead to the conflicts, okay. But at the same time, they also don't want to kill the whole tech sectors. So I believe that you notice that, for example, I think NVIDIA immediately lower down. I think NVIDIA or AMD, I can't remember. Lower down the GPUs from 100 to 800. So they actually, the speed of transfer, I think from 600 to roll down to 400. So they all lower down their spec, in order not to violate the US rulings. So that's why because you produce the text, you want to, all these chips you want to sell to China because China is the main market over there. So they in order try not to violate the rulings, then they actually lower down the spec so that they can continue to export to China. So so I think the major effect happened already and the price already factored in already. I think in general, I think the worst is still over for NVIDIA, AMD, all these. Okay.
All right, I think we shall conclude our question and answer session now. Zac, do you have any final message to share with us today?
I think just one final message is, do get in touch with us. I think I understand sometimes it can be hard to discuss too much over a webinar Q&A session, especially when it comes to something so technical and specific as structured warrant investing. But yeah, we are always here for our investors to get in touch. So do get in touch with us or read some of the things that we share. All right, I think that's all for me today.
Right. So thank you so much to Mr. Ooi for sharing with us your insight and perspective into the global economy outlook, the stock market outlook, as well as domestic market outlook. And thank you so much, Zac, for sharing with us how do you use structural warrants, what are key metrics that we should look at, what are specs that we should look at, and what are your Malaysian listed Hong Kong warrants. That can give us exposure to access the Hong Kong market without leaving the Malaysian shore. All right. So thank you so much, Zac and Mr. Ooi. So hope all of you here have walked away with something valuable today. So we look forward to seeing you in our next webinar. So bye, everybody.
Good night.
Thank you. Bye. Thanks.